And back here in Africa, in May last year, Kenya's telecom regulator commissioned a study of competition in the sector, and the report was recently leaked. Now, the leaked report recommends breaking Safaricom up into separate telecoms and financial services businesses because the firm is too dominant. Safaricom, which is 40% owned by Britain's Vodafone, is by far the biggest telecoms firm in Kenya. It has 26 million subscribers and dominates the thriving mobile-based financial services sector when it's its innovative M-Pesa platform. Now, in its report on Safaricom, Exotics Partners London says the devil is in the detail. Let's talk to the author of this report, Binta Cisse-Drave, equity analyst with Exotics Partners London. Good afternoon. Thank you very much for joining us, Binta.
Good afternoon.
Now, when you captioned that report, the devil in the details, what are you trying to portray there?
I just wanted to highlight that at this point, we don't have the final report. The draft version has been leaked, but we don't have all the information that we need to truly assess the impact this could have on Safaricom, the impact this could have on the telco sector, and the impact this could have on the overall Kenyan economy. So I think people should be careful before they jump into conclusion, and we need more details to be able to truly assess the situation. As it is right now, we are waiting for the CAK, which is the telco regulator in Kenya, to review this report. There will be further discussion with the stakeholder who potentially provide further amendment. So the final version is just not yet out. So we should be very careful before we speculate on the final outcome this could have.
Yeah, you're saying, in other words, you're saying that the panic that findings actually created when the report was leaked is totally unjustified. Now, is it really bad for a company to be declared dominant in a particular sector?
Well, it's something that happened quite commonly in the telco space. For example, one of the latest example is Maroktel, which we mentioned in the report. Maroktel was declared dominant in April 2016, and since then the company performance in the country actually improved, and in terms of market share, in terms of growth. So being declared dominant doesn't necessarily translate into a negative situation for the company. It all depends on the rules that are being implemented to prevent, to basically to the dominant operator. So it's very early stage right now to be able to jump into conclusions.
Now, what financial impact do you think the breakup of M-Pesa would have on Safaricom?
Again, it all depends on what are the different rules that will be implemented. As to now, we don't really know how the breakup will happen, i.e. will they be considered as a subsidiary of Safaricom and then consolidated into a group? Will they have to set up their own separate entity, i.e. hire their own staff, have their own IT infrastructure? So all those details are key to assess the true impact of this separation. But as it is right now, we think that Safaricom represents about 20 to 25% of the total value of the company. M-Pesa represents 20 to 25% of the total value of Safaricom, sorry.
Well, the report is not yet clarified. The regulators are still investigating whatever the findings are before it was leaked. Now, assuming Safaricom actually comes out to be declared as dominant, what would be the implications for the Kenyan telecom sector?
Well, it's difficult to say because we don't have a final answer to that. But what we actually did, we did a work based on what happened in other markets. And what typically happens is that rules such as MTR asymmetry will be introduced, which means that the termination rate that Safaricom will be charged will be different from determination its competitors will be charged. The other thing that they can also introduce, which is usually something that is being introduced in other markets, is maybe more scrutiny regarding promotional activity, price changes, so they will have more rules to follow regarding less flexibility to set their own tariff compared to their competitors. So obviously that could potentially have a negative impact on the company. However, I would like to highlight that as it is right now, Kenya is one of the cheapest country in terms of calls, for example. And so based on that, and we are already in a situation where Safaricom is priced at a premium compared to its competitors, and they are still the market leader in this market. So my view is that pricing is really not so much an issue, and the impact wouldn't be as bad as people fear it will be.
Now, looking at Kenya's telecom sector generally, what is your outlook?
The outlook is obviously fairly positive for Safaricom. It is true that for other companies, because of what happened in the past, so just going back down history lane, when Airtel entered the country, they started a price war. And I think that's the main reason why the competitors are struggling right now, because they basically destroyed a lot of value. Safaricom was actually impacted by this price war, but given their superior coverage, the fact that they were the #1 in the country, they had a better network, but they're also a very innovative business. They were the first one to introduce M-Pesa, and for all these reasons, Safaricom was able to maintain its leadership position. But I think there are still a lot of growth opportunity, not only in the pure telco space, i.e., by that I mean voice, data. Especially in data, there are still a lot of opportunities, and the growth potential is certainly very strong there. And also in the mobile money space, where I think we are still at the beginning of a lot of more growth is coming through over the next 5 years.
All right, thank you very much for your time, Binta Cisse-Drave, equity analyst with Exotics Partners, London. Thank you very much for your time. We move on now to South Africa. The Committee on Foreign Investment in the United States will extend its scrutiny of a $2.2 billion takeover by South Africa's Simbaye Gold of the only U.S. miner of platinum and palladium Stillwater mining. The committee, which examines deals for potential U.S. national security concerns, extended the deadline for its review from February 28 to no later than April 14, 2017. We'll be back after the break. Do stay with us.